This webinar is proudly brought to you by investingh, and we are glad to have you here this evening. For those of you who are joining us for the first time, investingh is the leading provider of financial news and education in Ghana. And over the years, our news, magazines, and webinars have been delivered to thousands of people in Ghana and beyond. And we'd like to thank you for your continuous support and also for joining us this evening. We've had webinars in the past that has covered topics on investments in mutual funds, stocks, cryptocurrencies, and real estate. And all our previous webinars are available for streaming on our YouTube channel, investingh. This webinar is also streaming live on our YouTube channel, investingh. So if you're unable to join us here, or you know someone who is unable to join us via the Zoom link that we have distributed, kindly send the YouTube live link, which will be made available in the chat session to that person. And also, if during this webinar you have any questions for our speaker or any question on the topic, kindly direct them through the host or co-host in the chat session here, or you can type them under the comment section on the YouTube stream. Today we'll be discussing Insurance 101. Insurance 101. And we want to talk about what everyone must know about insurance, what everyone must know about insurance. And to take us through this discussion, we have a high-profile speaker in the person of Mr. David Mawutor Avor. Mr. David Mawutor Avor. And he is going to be our speaker for today. David is here. But then before he joins us, I would like to give you a brief introduction who he is and why we have invited him here to talk to us today. So David is a very passionate person, and he's passionate about insurance, investments, and finance in general. He has over 10 years of experience in the insurance industry, and he is currently the head of reinsurance at Vanguard Assurance Company Limited. He's currently the General Secretary of the Chartered Insurance Institute of Ghana. David is a chartered insurer and an associate member of the Chartered Insurance Institutes of Ghana and the UK as well. So he has a very strong profile there. He also has an MBA in finance from the University of Ghana Business School, and also attained a bachelor's degree in administration, the insurance option from the same University of Ghana Business School. David is an avid writer on subjects of investments and insurance, and he does that through his blog, which we'll share with you during the course of this webinar so that you get to read more about David. We'll start this webinar with an introduction and a presentation from David, and then we will take your questions. We'll have a discussion around the topic, and then we can end. So David, if you are here, kindly unmute yourself. You're welcome, and thank you for joining us this evening.
All right, thank you very much, Prince. Can you hear me?
Yes, I can. I can hear you.
Thank you very much, and good evening to everyone, and good morning, good afternoon, depending on where you are joining us from. I think it's a privilege to have this opportunity to share with us this evening. I'm excited about the opportunity, and I want to thank Prince, Eric, Ellie, and all the organizers for putting this together. I think financial education is a must. It's something that we must all take seriously. It's something that we must update our knowledge on regularly. So this is a very good opportunity for us to look at one side of finance, the issue of insurance. Prince, we can go right into it, right?
Yes, we can.
All right. So I would just begin my slides. So basically, I'm going to spend the next few minutes doing a presentation on some of the things that I feel are very necessary. They are must for everyone to know about, whether you are in insurance or not, no matter the field in which you find yourself. it's essential that everyone has understanding and knowledge of these things. That's how come we've titled this presentation Insurance 101, what everyone must know about insurance. Our outline is going to take this form. So basically I'll share with you 3 stories to start. Then I'll tell you our objective for today, what we are trying to achieve with this presentation. Then we'll go on to the issue of what is insurance. We've been hearing the word insurance. Sometimes it's very easy to assume that once a word is common, everyone understands it. But we don't want to leave anything to chance. We'll properly define and explain insurance. And we'll do a very little history on insurance. Then we will focus on the need for insurance. Why is insurance even important? Why aren't you talking about anything else this evening? Why insurance? We will then move on to look at some misconceptions and accusations against insurance and insurers. And I'll try to be as candid as possible. Where we have erred as insurers, I would acknowledge that. Where there are misconceptions, I'll point that out clearly so that we are all very clear in our minds. Then we will move on to look at a very fundamental law that underpins insurance, which is called the law of large numbers. We will look at that in details. Then I will then share some insurance products and we will discuss the next steps. Right, so let's move right on. So the first story I want to share with you this evening is about a friend of mine. For the sake of this presentation, we'll call him Kweku. Kweku is a friend who had the dream of owning a particular car, and he saved, invested, did all he could, and finally, about 2 years ago, the car arrived. And we were all very excited for him. Obviously, he himself was more than excited. As the picture is showing, I mean, that is not Kweku, but the picture is a depiction of how happy Kweku was to have that car. Being the insurance person that I am and the finance person that I am, I spoke to him and advised him that I think it will be very prudent for him to take an insurance policy for the car, preferably a comprehensive insurance. And can you imagine the response he gave me? He said, "Oh, insurance is not necessary. We insurance, we just chop their money, to put it bluntly." Anyway, I did my best, but I couldn't convince my friend Kweku. Fast forward about 2 weeks, he was on a journey from Cape Coast to Ho, obviously to go and show the car to his family. And the unfortunate happened. He was involved in a very serious accident. The car was badly damaged. Thankfully, he didn't die. Once you have life, there's always an opportunity. But his very cherished car, the car that he so much cherished, and he had worked hard to achieve, all of a sudden was damaged beyond repairs, bringing Kweku back to where he started from without a car. Now he needs to save and get another car. I don't know if he will be able to do that, or even if he will be able to get that same car that he had. So that's our first story. The second story is about June 3rd, 2015. It's unfortunate this is not an in-person session. Like I would have asked what happened on that day, but I think still we can still type in the comment section to make this interactive. June 3rd, 2015 is a very symbolic day in the history of Ghana. That was the day that the twin disaster of the flood and the fire occurred at Circle. I saw this picture showing the damage. In fact, even this picture is an understatement of what really happened. So many businesses went down. You can see vehicles over there burnt to ashes. Businesses were flooded and so on. After this event, let me say 2 categories of people and businesses emerged. There were those that were able to get back on their feet and their businesses are still running as if nothing happened. And there are others that this event spelled the end of their business. This was the doom day for their business. We will see why some are still in business and flourishing and why others have collapsed. The third story, this is a story about all of us. I'm sure we all know one family or the other whose living standard has come crashing down after the death of the family's breadwinner. By the way, I always wonder why we say breadwinner. Why not any other food but bread? Anyway, maybe because bread is a universally consumed product. So maybe that's how come the term breadwinner exists. But basically, as we know, the breadwinner is the main provider for the family, the one who, let me say, the financial support of the family. And I'm sure we all know one story or the other of how when a breadwinner dies, without the proper things in place, the family's standard of living comes down drastically. What do all these three stories have in common? What is the common thread? These stories are all realities of life, and there are many more of such stories. These things happen on a regular basis. I mean, once you are above 20 years, you would have encountered one or more of these stories. These are daily occurrences. These are things we can do without. So long as we are in the world, uncertainties will happen. Risk will come. Things will happen that we didn't anticipate or plan for. But one thing is certain, the lives of all these people would have been much better. All the people we've looked at and all the businesses we've discussed, their lives would have been much better and easier if they had taken a relevant insurance product. And the key word here is relevant. Relevant because just as you can't use medicine for headache to cure stomachache, the same way you can use an insurance policy meant for a home to cater for a car. I mean, there are specific products for specific risks. Unless, there are some medicines that are all curing. The ones they normally sell at the drug stations. One medicine cures malaria, cures fever, stomach ache, cures everything. But I mean, there's no insurance product like that. And in reality, there's no medicine like that. Every medicine or every insurance product does specific things. So the key word here is to get the relevant insurance products in place for the risk that you are faced with. The main lesson, insurance is very important in our everyday lives. When the disaster and unfortunate events occur, insurance will come and bring you back up onto your feet. Our friends can help, but only to a point. Friends cannot continue to carry your burden forever. They would obviously get tired of you. It is just human nature. They themselves also have their own problems to face. So they will help and support you to a point, but definitely they will leave you along the line. So the wise thing, the financially smart thing to do is to have relevant insurance products in place to cater for your risks. So what are our objectives for this evening? What are we trying to achieve? Firstly, we are trying to prove that insurance is actually a necessity and not luxury. Sometimes you talk to people about insurance and they'll say, hey, even what I will eat is not enough for me. You're announcing I should spend an extra money on insurance. In actual fact, the more needy in quotes that you are, the more you need insurance. That's the truth, because the more needy you are, it means when something happens, you are more vulnerable to the shocks. So you even need the insurance more than those that have much more. But the interesting thing, those that have much more and are more financially educated, they take insurance more easily than the average person. But my hope and my prayer is that through this discussion we're having, through this education, all of us on this platform will grow in our financial wisdom. In actual fact, one of my mentors, Dr. Yaupebi, he calls insurance one of the 25 financial principles, meaning that if you don't believe in insurance, if you don't actually take insurance, your financial wisdom principles are not yet complete. You are still lacking a tool in that box. So we are trying to prove tonight that insurance is a necessity. Secondly, we want to understand some basic tenets of insurance and also look at some of the common insurance products. Of course, there are a number of insurance products, so many of them that this session will not be enough for us to exhaust it. So I will just touch on a few of them and give a high level overview of some of the products and what they are intended to achieve. But we can't tackle every insurance product. Don't forget, insurance is actually a course in the university. I read insurance in the university. So for a whole 2 years, we were doing insurance. But even with that, we didn't exhaust the whole subject. So we can obviously not exhaust everything in this sitting. Then our third objective for tonight is that we want to answer any insurance-related questions which you may have, which may be on your mind. I'll try to take as many questions as possible so that we all live here with our minds clear and our anxieties and fears and questions answered. Right. So what is insurance? I mean, just as every subject, there are numerous definitions of insurance, but I've picked two explanations for us to look at, because I think with these two explanations, we can be able to tease out the main things, the nuances of insurance. So first of all, insurance is a risk transfer mechanism in which one party, called the insurer, agrees to pay another party, called the insured, a specified sum upon the occurrence of specific events in return for a consideration called premium. Don't worry, we are going to break it down. We are going to break down the main content of this definition. So the first thing we want to talk about is that insurance is a risk transfer mechanism. So when you take an insurance product, what you're actually doing is that you are transferring a particular risk that is facing you as an individual or a business to a company. So you are transferring that risk that is facing you. So if it's a life insurance policy that you are taking, you are transferring that risk of death or that risk of inability to cater for funeral needs to the insurance company. Then the second issue is that there is a specified amount, or there's a specified sum. So whenever you take an insurance product, they will tell you what you are entitled to or how much you will be paid if certain events occur. So the next issue is that there are specific events. As I said, insurance is not a cure-all solution. It's not a silver bullet that solves every problem. So every insurance product is there to address specific events. So they will tell you the specific events that the product is supposed to cater for. Then the last thing we want to talk about is what we call premium. And premium is basically what you pay to the insurance company. You know, insurance is actually a legal contract. So our law people will tell you that that is the consideration. In contract, we have offer, acceptance, and consideration. You make one party makes an offer, the other accepts. But in exchange for the offer, there must be a consideration. You must give something to get something in simple language. So what we give to the insurance company is what we call premium. And that is the consideration we are giving in order to be able to enjoy the promises they are making to us, that when the specified events occur, they will pay us certain things. A second explanation of insurance, a much simpler one, is that it is a risk pooling arrangement in which the losses or claims of an unfortunate few are paid from the contributions of fortunate many. Once again, let's pay attention to the key phrases here. The losses or claims. So as we mentioned, you must suffer a loss. You must suffer something negative, something undesirable must happen for you to benefit from your insurance policy. Then as in most cases, I mean, a loss must happen or a specified event must happen before you are compensated. And mostly those who suffer the losses are those that we call the unfortunate ones. But for the insurance to be successful, those people must be fewer. So if there's an insurance and everybody is suffering a loss, everybody is experiencing, assuming for example for a car insurance, if everybody's car is involved in an accident, then obviously the insurance company will not be able to shoulder all that responsibility. And I'll explain why along the way, because you do not pay, the premium you pay is not the value of the car. It is just a fraction of the value of the car. So for the pool or for the insurance arrangement to be successful, we need there to be a majority of fortunate people who do not suffer losses, and their premiums or their contributions are used to cater for the losses of the unfortunate few who suffer losses. So basically, those are the explanations for insurance. As I said, there are many definitions, there are many things we can look at, but I think these two bring it home and bring it down to the barest minimum that we can all understand. Right, we want to now do a little history of insurance. Insurance has been around for a very long time. I mean, when you read history, it tells you there are three key historical dates in the literature of insurance. The first one is in BC 4000, BC standing for before Christ. Once again, you can't do away with Christ. You can't run away from Christ. He's everywhere, even in our dates. So even before Christ, 4,000 years before Christ, there was some form of insurance among the Babylonians where they did loan guarantees. So basically, those who gave loans to others took insurance, one form of insurance, so that if the guy is unable to pay back, the insurance company or whoever was guaranteeing the loan would come and repay that loan. So that existed right even before Christ came on the scene. But even after Christ, AD 113, there are records of burial societies among the Egyptian society. So basically, these burial societies are like, let me say, the olden day form of what we have like our life insurances today. So the people that contribute to it, when one of them dies or one of their relations die, they come together and organize the funeral and cater for the funeral needs. But the third significant date, which I think is more important for us or most important for us in our present dispensation, is from the 1600s. That is where insurance as we know it in its current form began to evolve. And this happened to be where people guaranteed sea voyages. As you know, previously, we didn't discover each other. If I say we didn't discover each other, I mean that those on the various sides of the sea, the Europeans didn't know that there was any place called Africa. Africa also didn't know there was any place called Asia. So every continent, we were all separated by the sea. But with time, out of curiosity, people began exploring. They tried to sail on the sea to see where it would take them to. But those things were very expensive. Constructing those ships were very expensive, and they also didn't know where the journey will end. It's not now that you know that if routes have been developed, so a ship will sail and we can tell for certain when it will get to the other side. Those days they couldn't tell that, so there was a lot of uncertainty. So assuming you were able to come together, you constructed a ship, you tried the voyage. Along the way, the ship sank or it got destroyed. You have to come back, reconstruct another ship. So it was a costly endeavor until the insurance people came around. People formed insurance companies. They said, why don't we guarantee these voyages? So basically, those that were going to go on the sea, all they needed to worry about was construction of the ship and their safety on sea. There were businessmen behind them. There were insurers behind them, guaranteeing that should the ship get destroyed on the sea, they would pay for the damage so that they can construct another one and try again. So insurance was very instrumental in discovering the various continents and in shaping our current way of life. I'm sure without those insurance covers for sea voyages in the past, maybe it would have taken us much longer to discover each other, or maybe we may not even have discovered each other at all. So the relevance of insurance in history is quite profound and cannot be underestimated. Why is insurance necessary? What is the need for insurance? I want to put across 5 reasons. The first reason is that it gives you peace of mind. It gives you peace of mind. Imagine you are in your house, then thieves break into your house. If you know that you have an insurance policy, your main concern will be the safety of your family and those with you. As for the properties, you don't need to worry about it. So long as there's insurance to cover it, if the thieves take it away, they break into it, your insurance company will be there to restore you. That is just one example. All insurance products, the fundamental thing they are trying to do is to give you peace of mind to go about your business. Because remember what he said, it is a risk transfer mechanism. You have transferred the risk to the insurer, so you can have the peace of mind to move about and to do what you need to do without worrying so much about what may happen if the risk crystallizes or the loss occurs. The second issue is that it helps protect capital accumulation. Remember the story of my friend. All the money he lost in that car, that is capital that is lost. What if he had taken an insurance policy and the insurance has come in to reimburse him or to reinstate him? His capital would have been protected. I mean, the money he's now going to use to buy a new car, he could have used it for something else. So his accumulation of capital would have been protected. But because he didn't have that in place, it obviously affected him negatively. He needed to start afresh, start from square one or square zero, whichever you put it. The third one is that it covers you against uncertainties. I think that is very clear. There are things that we all cannot guarantee. Insurance provides you cover against some or most of those. Fourthly, it can be a legacy for your family. I mean, in the life insurance sector, one very pleasant news for people when they lose loved ones is to get to know that they actually had insurance policies in place. One very pleasant news. Of course, death is not a good news. The loss of a loved one is something that is painful for everyone, but it gets relatively easier when you know that the one passing away has made some provision that in his absence, you have financial muscles to cater for whatever the needs may be. In actual fact, research will tell you that most of the crying, the excessive crying we see during funerals, most of them is financially inspired. Strangely or sadly, most of them, people are crying and wailing because they are thinking, especially if it's the breadwinner, who will provide for us again? And if people say it, they are weeping, they will be saying, oh, so who will now provide for us, who cater for us? So that is part of the reason people cry. I'm not saying it's not good to cry when you lose a loved one. Of course, you grieve, but insurance makes the pain lesser by providing. You just grieve for the loss of the things that money and insurance cannot replace. But the other things, you don't necessarily have to grieve over them. Then the last one is that obviously insurance provides source of investment fund. The insurance companies that we know, in actual fact, in Europe, most of the big businesses are owned by insurance companies. Insurance companies have invested heavily in big businesses. On our market, insurance companies do own some businesses. Of course, it's not as profound as you, but I'm sure we all get there because insurance premiums provide source of investment funds, and it also provides a source of employment. People like me are employed in the insurance industry, so it is very important. It's very important to have insurance on this. So I made mention of the law of large numbers. So we want to look at this. What is this law of large numbers? The law simply says that the average of the results obtained from a large number of trials should be close to the expected value and tends to become closer to the expected value as more trials are performed. Don't worry, we'll break it down. This is actually a mathematical principle, but it is very fundamental to the success of insurance. So basically, it's saying that when you repeat an experiment many times, the larger the number of times you do the experiments, the more predictable the results become. The results will all become, they would fall within the ranges of the mean. How is that applicable to insurance? Remember, we mentioned that the losses of unfortunate few paid from the contributions of fortunate many. It means that once the insurance pool is large enough, once there are a lot of people in the pool paying premiums, it becomes easier for the insurance company to predict the level of losses that will occur and to also plan for them so that there are no surprises. When the losses happen, the insurance company is able to pay for them. So insurance would not be successful if there are too many few people in the pool. Assuming that there's a product and there are only 10 people who buy it, it's very likely that product will fail, or the premium of that product needs to be very high for it to succeed. For insurance for the premiums to be affordable, the larger the better it is. So that's what we mean by the law of large numbers. It is at the heart of the insurance business. It is at the core of the insurance business. One duty that insurance companies have is that they have the duty to protect the pool against fraudulent claims and also against excessive management of expenses. Remember, we said insurance is a pool. Who are those managing the pool? The insurance companies. So it is their duty to make sure that the funds are protected against fraudulent claims. And fraudulent claims, there are a number of them. You see it quite regularly. Not only on our markets, even in developed nations, we have fraudulent claims. People staging the death of loved ones, people deliberately committing arson, burning down their buildings to recover from insurance. So all those things exist. So it is the duty of the insurance company to protect the pool against such fraudulent claims so that the pool is not depleted. It is also the duty of the insurance company to protect the pool against excessive management expense. It doesn't make sense for the insurance company to spend all the money just paying themselves or paying management fees, whilst the fundamental thing of paying the claims of the insured gets neglected. That will not be a good insurance practice, or the insurance company will not be administering the insurance rightly if it does so. Okay. So now let's come to the misconceptions and accusations I alluded to. Number one is that insurers are quick to collect premium, but slow to pay claims. Insurers are quick to collect premium, but slow to pay claims. I'm sure we've all heard that before, or we've even said it before. My response to this will be, yes, it is true. I want to shock you first before I explain. It is true. It is true that insurers are quick to collect premium and slow to pay claims. But what does that mean? The key word there is slow. We are not saying reluctant or unwilling. We are saying slow to pay claims. Why am I saying it's true? Insurers are careful in paying claims because, just as I mentioned in the previous slides, it is the duty of the insurance company to protect the pool against fraudulent claims. And trust me, there are a number of fraudulent claims, a number of them. We see them on a daily basis. So when the loss occurs, the insurance company wants to take its time and be sure that the loss is actually a genuine one. It is not staged. And once the insurance company is cleared in their mind, all ambiguities have been extinguished, the right documents have been provided, I can assure you that insurance pays. Insurance companies are paying premiums on a daily basis. In fact, I'm going to show you some statistics of the average payments of claims that are done on a daily basis in our market here. So insurance pays. They may be cautious or a little slow when it comes to the claim process because they want to be sure that the claim is genuine and is not staged. But ultimately, it's not an unwillingness, or it is not a skill or skirmishes to prevent or to not pay what is due. In actual fact, if it is clear that the claim is genuine and the insurance company refuses to pay you, there are numerous sources of redress. You can report them to the regulator, the National Insurance Commission. You can even take them to the Ghana Insurance Association or GIA. So once it is a genuine claim, you will definitely be paid. You just need to provide the right documentation. Second issue is that people say insurers promise things which are not in the policy. Unfortunately, I see this on a daily basis. Sometimes this happens because some of the agents that work for insurance companies, some of them are not quite truthful to the insured. So it does happen. But you as the insured, you also have a duty to ask the relevant questions. And aside that, you have a duty to look at the insurance contract. Remember, we said insurance is a contract. So every insurance contract, they give you a policy document. That is the contract you're entering into with the insurance company. It is your duty to peruse that document. If there is something you don't understand, ask questions. Don't just take the document and go and put it down. Don't just take what whoever is selling to you has told you without cross-checking what they are saying, whether it is true or not. So yes, it is true that some people make promises on behalf of insurers, which may not be in the policy document, but it is your duty to cross-check. As for the insurance companies themselves, no insurance company can deliberately make false declarations in maybe their adverts or presentations. The insurance commission will deal with them, so they can do that. But it is true that some agents and some reps, in their interaction with people, do promise things that are not in the policy. But you owe it to yourself. You owe that duty to yourself to cross-check and be sure that you are not being swindled. Also, there's the accusation that insurance policy documents are too bulky and sometimes the wordings are too tiny to read. Let me allay your fears. I think in the past it used to be so, but now things are getting modernized. Insurers are doing away with all unnecessary wordings and are only keeping the relevancy. So I can assure you that insurance companies now have very friendly policy documents, not bulky ones, and obviously very legible ones, not ones that are written so tiny that you can read and understand. We have documents that are broken down into very simple language that you can read and understand. And as I said, if you don't understand anything, ask questions. It is your right. You need to be very clear on what you are buying right from the onset of the policy. So feel free to ask questions, and your insurer must be there to answer you. The last one is that people say insurers are thieves. Insurers are thieves. Please don't do that. Don't do that. Don't say that. This one in the voice of Shatawale. Don't do that. It's not nice. Please, we are not thieves. Insurers are not thieves. It's true that people may have committed one fraud or the other insurance business, but it is not true that insurers are thieves. Insurance is a genuine business. being done by decent people and truthful people, truthful businessmen and individuals selling insurance. And insurance is not a Ponzi scheme. Ponzi schemes are totally different, where people just collect money from others. There's no product underpinning it, and they are just recycling the money. They take the money of B to pay A, they take the money of C to pay B. They continue until one day they vanish from the scene. Insurance companies are not like that. Many insurance companies have been around for many years. Even in Ghana, we have insurance companies that are over 50 years, over 60 years. Even my own insurance company, we are over 50 years. So, I mean, companies have been around for long. They are not thieves, they are not Ponzi schemes. They are not running anywhere with your money. Yes, so now let's look at the insurance industry data I alluded to. I mean, there are about 8 facts here. I took this snapshot right from the annual report of the Insurance Commission. This is the 2019 one. Unfortunately, the 2021 is not available at the moment, or I didn't get access to it. But I think the situation will not be much different, so we can use those figures. Look at the arrows, the green arrows. The one on the right tells you that we have, on average, we pay 1.4 million Ghana cedis. Averagely, the daily claims that non-life insurance companies. In fact, just to clarify, we have life insurance companies and we have non-life insurance companies. They are all under the NIC. And the non-life people, every day, averagely, they pay 1.4 million. 1.4 million is, in fact, as I said, that was 2019. I'm sure 2020 or 2021 figures will be much higher than this. But look at that, 1.4 million daily, whilst the life industry pays 2.2 million daily. If you add those two, you are talking about 3.6 million being paid on a daily basis by insurance companies. So it's obviously not true that insurance companies don't pay claims. They are being paid on a daily basis. So in actual fact, that's how come we realize that as industry players, we have a duty to play, because we are doing all the good works, but it's like we are not telling our story enough. So the industry is getting bad name for no reason. So just this month, I think the Insurance Awareness Coordinators Group, they created a campaign called Insurance Space, which is basically to educate the general public that, I mean, on what to do about when they have an insurance claim, and to assure them that whenever they have a claim, the insurance industry is there to pay. I'm sure we will soon start hearing radio jingles, we'll soon start seeing adverts on TV to drum that. But the bottom line is that insurance companies are paying a lot, but unfortunately, the news is not getting out there well enough, but that will change soon. When you come down, the arrow at the down shows that total corporate tax is 7.2 million. So in 2019, we paid the taxes, the corporate taxes insurance companies paid to the government was 7.2 million. That goes a long way to plug some of the holes in the budget of the government. Then unemployment, the last arrow shows that about 12,000 people have been employed by the industry, going back to support the point that we made that insurance is a source of employment to many. Okay, so now we want to look at a few insurance products. As I said, there are many of them. We can exhaust everything, but I want to just touch on a few common or pertinent ones that I believe everyone must have an idea about. Remember, our topic is Insurance 101, so we want to look at the basic. The first one is the motor insurance. And for the motor insurance, I think most people have heard about it because the police check for it on the road. But there are 3 main types of motor insurance products. We have what we call the third party only, the third party fire and theft, and the comprehensive. So the third party is basically what the law requires, that at least when you are driving on the road, you need at least a third party cover. Let me explain why the law says so. I'm sure we've all chanced on one accident or the other where somebody is driving cautiously, carefully, and someone from nowhere just drives into them, or an accident happens, or someone is passing by. They are on a daily basis. People are being knocked down. Innocent pedestrians are being knocked down. Imagine some of these people that knock these people down or cause these damages. They are men of straw. Sometimes a throttle mate will go and take the driver's car and just go and run into somebody, and they can compensate the person for the loss that they've caused. So the law or government in its wisdom realize that it will be better if we rather make everybody pay something to insurance companies who are better positions to manage these funds, so that when such losses happen, the insurance company will come in to compensate the third party that has suffered the loss. So that is the idea of the third party products. But the question is, fine, that is good, but what happens to my own car? Why won't you pay me or compensate me for my own car? So that is the next level. If you want your own car to also be paid for, then you should be looking at either the third party fire and theft or the comprehensive. The third party fire and theft, as the name suggests, it pays for losses when your own car is damaged either by fire or is stolen or is lost through theft. But the comprehensive is the widest cover. It pays for many other things. It pays for accidental damage and so many things. As I said, we can exhaustively discuss all the full details, but it's just an overview. But one thing I want to state is that the comprehensive pays for much more things, but it doesn't pay for absolutely everything. So once again, I'm going back to what I said earlier. Try and read your policy documents. Try and ask the relevant questions. Know what it will pay for and what it will not pay for. And the premium rates for, I always advise everybody that if you spend money and buy your car, it is in your own interest to take a comprehensive cover. Don't just take third party and say you want to avoid the trouble of this. If you suffer a loss and you don't have comprehensive, you would have yourself to blame. And I'm not sure anybody wants to be found in that position. Insurance pays. Why would you just transfer the risk and have your peace of mind? And the premium rates are averagely around 5% per annum. I'm choosing my words carefully. Average, it may vary, but not significant. The average is around 5%. And so just assume your car is 100,000, 5%, 10% should be 10,000, 5% would be about 5,000. We are talking about 5,000. It's better to pay that 5,000 annually and get your car 100% protected than to say you will not pay and keep the money and the loss happens and you are brought back to where you started from. Secondly, we have the fire insurance. And for fire insurance, you can have it for both your home and your business. The product actually does not only cover fire losses, but I mean, fire is the main thing, it's the most common peril. That's how can we call the product fire insurance. So you can take it for either your home or your business. And it's basically to protect your home or business against fire, flood, burglary, and what we call the allied perils, earthquakes, storm, and so many other things. And that one to average, the rates hover around 0.2 for your homes. This one is not even 1%, 0.2%. That will be the premium you pay averagely for your homes and 0.5% for the contents. So it's highly affordable and it makes financial sense to take such a policy and transfer your risk to the insurance company. And just one misconception to correct. It's not only, you don't need to have your own home before you have a home insurance policy. Even when you have, you are in a rented apartment, the things in the apartment are yours. The things in the apartment are yours. So you can still take an insurance for your valuables in your own apartment or in a rented apartment. So that's just a point you must all note. Right, at this point, let me say, should I say, right, it's not by default, I can go without talking about a product, a fantastic product that my company has introduced, which is the comprehensive insurance. The comprehensive insurance basically just combines these two things that I've spoken about so far, the home insurance and also the motor insurance. You know, as I said, most people know about motor insurance, but they don't know about home insurance. But my company, Vanguard Assurance, is driving the agenda that don't just think about your car. Insure your home as well. So when you are thinking about insurance, just go for the home and the car at a go. So for those that don't haven't done a home insurance yet or haven't done a motor policy yet, you can speak with us after this and we'll sort you out. It's a very fantastic product. I'm sure you've seen our billboards, you've seen these ads somewhere. It's something that we are providing to the market and the market is excited about, and we will gladly welcome you on board. The next products I want to talk about are the life and disability insurance products. So for those ones, the basic idea is that they provide cover for yourself and close family members such that upon the occurrence of death, some form of compensation gets paid. Once again, let me just state that I am not talking about specific products. I'm giving the idea behind the products. Every company has its own products. The underpinning idea is the same, but everybody adds one or two things to customize it to make it unique to their company. So the basic idea is that upon the death of yourself or a close family member, some form of payment is done. Some of these products add funeral expenses, so they can pay for the cost of the funeral. Some even add 1 year anniversary expenses, and some also pay for those that survive. They pay for their living expenses after your demise. So there are various nuances of this type of products, but the fundamental idea is that upon the occurrence of death of someone, a particular payment is made. Others also have embedded investment components. So you don't even need to wait until someone dies to enjoy the benefits from the product. Some even give loans. So there are various products. So talk to your insurance company and see what they have on offer. Also, we have health insurance. Health insurance provides cover against certain illnesses. Thankfully, most companies have some form of health insurance for their employees. So find out if your company does. If your company does not, it will be worthwhile to consider getting one for yourself personally. And even if your company does, you can always do a top up for yourself, because as for health, you can't overcover yourself. And once you do that, some of those issues that people suffer one disease or the other, and appeal for fund has to be done to be able to support them. I mean, if that could be done, that's fine. But you and I know that sometimes the funds don't come in as quickly as expected, and the people even end up losing their lives. So talk to your company if you have some in place. If you don't have some in place and you have the power to make that decision, it will be prudent to make that decision on behalf of yourself and your colleagues. Then there's also pensions. Pensions is actually an insurance. And thankfully, let me say the 3-tier pension scheme that is currently being run in Ghana caters for this to some extent. Although not, I mean, there are challenges. I know people have complained about the amount SNIT pays when the lump sum you get from SNIT. I'm not speaking to the adequacy of that, but I'm just talking about the general design. At least having something in place is better than having nothing at all. So the 3-tier pension scheme idea is good, but I would highly recommend that let's pay particular attention to the tier 3 or the provident fund, because that is what you have much control over as an individual or as an institution, and you can make much gains from that tier than the other ones. So yes, it is good to have pensions. Pay particular attention to the tier 3. In fact, there are some companies that are or individuals that are doing individual pension plans aside the mandatory one of government. I know there's one that you can subscribe on your phone, and there are automatic deductions at the end of the month. So pensions is also a form of insurance that we must be aware of. All right, so we want to round up. What are the next steps after all this that we've said? The next steps are that assess your current situation and decide which insurance product or products you need. Secondly, talk to a qualified broker, agent, or insurance professional if you need guidance. Of course, you can speak to people like us. We are always available. And I see a number of insurance people too on this call. There are a number of them available to guide you. You can also go to the NIC's website to check the insurers and intermediaries in good standing. So when you are dealing with an insurance company, as part of your due diligence, go to NIC's website. All the insurers that are in good standing are listed there. So once you don't see the insurance company you are dealing with over there, I will ask that you proceed with caution. It means they are either not registered or they are not in the good books of the regulator. So you need to proceed with caution. Then the next step is that make the investment and commit to it. Commit to it. Commit to it. You know, I'm stressing on the commit to it because people start and they don't continue. I know people who have signed on to life insurance policies. They pay the premium 1, 2, then they stop. Sometimes some of the products, if you do that, you lose everything. Even the contribution that you've done, you don't get it back. So be committed to whatever decision you make. So it's not a decision that must be made haphazardly. Think through it carefully, but once you take that decision, commit to it, and whatever premium you need to pay that premium. The same goes for the property insurances and all the others. Last thing I want to say is that remember to ask for the policy document. That is the basis of the contract. So ask for the policy document and read it. Read it. I mean, many a times I hear Ghanaians, we accuse our leaders that they go and sign contracts on our behalf that they haven't read. But we, the citizens, we are sometimes guilty of entering into contracts without reading the details of the contract. So I beg you, when you get your policy document, read it. If there is something you don't understand, ask questions. Even if you are feeling very lazy to read, the last thing I can tell is that at least there is something they add to the policy document, which is called the schedule. The schedule shows the details, your details of the policy. And most schedules normally give a summary of the cover. It will not tell you absolutely everything, but it will highlight the main things for you. So even if you can't read the whole policy document, at least the schedule, which is just a one page in most cases, read it and ask the relevant questions. So on this note, I think I will pause here and thank you all for your attention. And I'll hand over to Prince so that we can do the question times. Thank you.
Okay, thank you very much, David. We appreciate the education that you have given us. We are glad that we have learned a few things. Okay, so I'm still putting together a couple of the questions here for you, one after the other, if that's fine with you.
Yeah, let's go, please.
Okay, great. So the first one is, what is a no claim bonus, and how does that affect the value of my premium?
Okay, very good question. So the no claim bonus is a discount, or let me say a reward you are entitled to as an insured when you don't make a claim after a year. So basically, we want to reward our insureds who do not make claims after a year. Maybe within the year you've taken the policy, but you haven't suffered any loss, you aren't involved in any accident. We give you what we call the no claim discount at the end of the first year. But obviously, we can continue giving discount in perpetuity. There must be a cutoff point for the discount. So in the motor insurance, normally we give you for year 1, year 2, up to year 5. Once it gets to year 5, you don't get any further discounts. But sometimes, let me just add that some insurers give some of these discounts at the beginning of the policy. So ask that. I mean, it's not right. The regulator has tried to discourage that practice, because ideally you are supposed to pay what your fair share of premium in year 1. Then after that, if you don't have any loss, then you now start enjoying the no claim discount. But I know some people have been giving it at the beginning, using it to reduce premium. So ask questions. If you are not giving at the beginning of the year and you do not make any claim, you are entitled to it from the next year. But as I also stated, you will not be giving discount in perpetuity. After the 5th year, the premium stays as it is until maybe the NIC reviews again. Thank you.
Thank you to David. The next question says that, what insurance products does what insurance products do you think a 27-year-old should get?
Wow, this is a difficult one. Difficult because not all 27 years are equal. It will be good to do a thorough assessment of this 27-year to know, one, what he or she has and his standing. That will also affect what exactly I would recommend. But I'll just say largely, I think the 5 lines we've shared is something you should be thinking about. So obviously, as a 27-year, maybe you are working, you've been blessed, you have a car or something, you obviously need a car insurance. Maybe obviously you've rented your place, you have some properties in it, you need a home insurance. You should think about it. A life insurance is also helpful if you are the breadwinner, and or maybe should your parents die, God forbid, should you lose your parents or loved ones, you may be called upon to make one contribution or the other. You can transfer that risk to an insurance company using the life insurance product. If you are working in the formal sector, your pension bits will be catered for, and also maybe your health insurance will be catered for. So I think largely reasoning along the 5 lines of product that we shared should guide the 27-year-old. But it would also be good if he or she can talk to a professional who will do a more thorough assessment of their current situation and make recommendations. But generally, thinking along the 5 we've shared should be a good start. Thank you.
Okay, thank you very much, David. And next question says that what do most insurance companies invest their money in? That's from Raindog.
Another good question. So we invest in a number of things, government securities, so the bonds, the treasury bills, insurance companies invest in it quite heavily. And that's why when you take the financial statement of every insurance company, you will see that they invest quite heavily in bonds and treasury bills. Obviously, because those are safe investments, as we say in finance, the government is considered as the safest person to lend money to. So, but we also do other forms of investment. But the more risky the investment, the more NIC is against it. NIC, by NIC, I mean National Insurance Commission. They are the regulators of the insurance industry. And the same applies to the pensions people and also the health insurance people. So largely, you are advised to invest in very liquid assets, i.e. government bonds, government treasury bills. But if you do other investments, such as investing in other equities or stock exchange, or investing in real estate, which are considered relatively illiquid, it comes with some restrictions with the regulator. When you are preparing your financials, they discount those amounts to make a provision for your the risk that at the point of a claim, you may not be able to easily liquidate those investments. So we invest in an array of things.
Okay. Thank you very much, David. There's another one here asking, how do you increase the education for vehicle owners to always involve insurance companies in the event of auto accidents?
Great. That's also another good question. So I think I mentioned the insurance awareness coordinators campaign. So basically, you'll be hearing a lot of education to tell people on the process. In other words, it's a very simple process. So the tagline for the education campaign is that notify, submit, and get paid. Basically, we are trying to say that once the thing happens, notify the insurance company, submit the relevant documents, and get paid. So the education, I admit that the education needs to be stepped up. And in fact, the whole industry admits that we need to educate the public more. But most times when you talk to your insurance professional, your insurance broker or agents, they can give you the education. And also the policy document, most policy documents tell you what to do upon the occurrence of a loss or a claim. And so when a loss happens, a loss that you've insured, one of the very first people you want to talk to is your insurer, so that they can quickly come and see the loss. They can advise you on how to go about it and make sure that you are properly reimbursed and compensated.
Okay, thank you very much, David. Next one is from Pamna. He's asking that, does 100% comprehensive covering of the full vehicle, or the full value of a vehicle, provide insurance to purchase the vehicle in the event of theft or a damage beyond repair?
Yes, it does. So when it's 100% cover and the vehicle is totally damaged beyond repairs or is stolen, the insurance company pays you the value of that car. And we've seen a number of it. People who lose their vehicles every now and then. People are attacked and robbed of their vehicles. And if they have the right insurance, the comprehensive insurance, they will definitely have their vehicles purchased for them. The money given to them to get their vehicles back. So yes, that is right.
Okay, great. Next question is asking, what is your opinion on insurance brokers? Do you think we should go to insurance companies directly or through a broker?
Okay. My opinion on insurance brokers is that they are really helpful in that they help explain the product to you, and they are also they are a key component of the ecosystem of the insurance industry. So I won't say by all means you need to pass through a broker, but they are helpful. I mean, if you want to go directly to the insurance company and you have a relationship there, or you have someone who is ready to explain the things to you and help you out, you can also go directly. But brokers are also equally helpful. I know if you are very busy, sometimes you don't have time to follow up on your own policy. You don't have time to go and be asking the questions. You know, if a claim happens, you are at work, you don't have time to be chasing the claim. The broker or the agent can handle all those things on your behalf. So if you have a trusted broker or an agent that you can make use of, I will definitely not discourage you from using them. I will say that you can go ahead and use them because they don't increase your cost anyway. In most instances, they even help to negotiate better deals for you and bring down your premium. So yes, they are a good part of the ecosystem, but you also have the choice to decide to do without them. You can go directly to the insurance companies and you will be attended to.
Okay, great. There's this question from Avor. He's asking, how can I get my policy documents back if it gets missing, and at what cost?
Okay, so normal talk to your insurer. Most insurers will gladly replace your insurance policy for you. Once, thankfully, with technology, we have the insurance company also has a copy of every contract that they've issued. I mean, so your details will be in their system. Once they can confirm that you actually bought a product from them, they should gladly replace your policy document for you. As for the cost, I can't be very emphatic about it because it may vary from company to company. I know people will even replace it for you for free, and those that may even charge you to just be something insignificant. It will not be an obnoxious charge. So you can get the document replaced. So the earlier you contact them, the better.
Okay, great. We have another one from Randy. Randy is saying that we have cases of fire incidents at our major markets across cities in Ghana. What are insurance companies doing to alleviate the losses that shop owners suffer from these perennial events?
I would have been surprised. I would have been surprised if this question does not come. I mean, it's a question that keeps coming up very regularly. If it were to be WAEC exam, that is like one of the constant past questions. It's a constant past group. Okay, so two things. The first is that insurance largely insures what we call fortuitous losses, or let me say unpredictable, uncertain events. Okay. Unfortunately, in the case of our market fires, it has become almost like a certainty. It has become an annual ritual. Sometimes it's not even annual. Even in 1 year, you have many fires happening at various market scenes. It is not that insurers are shying away from them, but remember what we said, insurance is a pool. So either it's two things. Either the premiums they need to pay for the pool to be successful. Most times they are not willing to pay for it. I mean, I can tell you on authority that most of those people have been offered insurance products, and some of them fail to come on board because maybe they'll say the premiums were high, and the premiums will be high because, as I said, the loss has become almost like a certainty. Or every time it happens, So the insurance company has the duty to make sure that whatever premium they are charging is adequate to compensate when the losses occur. So that is one challenge we have with our markets. It's that the risk management there is very poor, it's very bad, that it's always become like a certainty, making it very difficult for insurers to carry that risk. And even if they are willing to carry it, the premiums they are charging, the people are not willing or maybe are not able to pay. But that notwithstanding, I can also say that there are people within those markets that are insured, those that have put in place proper structures, they have containers or they have shops, and they adhere to the risk management or risk improvements suggested by the insurance company. There are some of them that are covered. So it is not entirely true that absolutely no one in our markets are covered. There are people in the markets that are covered. But it is also true that as of now, we don't have a market-wide coverage for everybody operating in the market, obviously because the risk have become more like a certainty, and also because some of them, the housekeeping is quite bad. So it makes it very difficult insuring them. And the premiums that they need to pay to make the pool fruitful, sometimes they are not able to pay it. So that's it about the market. Some are covered, but others are not covered because of the reasons I've stated.
Okay, thank you very much. But still staying on the topic, the question is, what insurance policies are available for such businesses, such small and medium-sized businesses?
No, so the policies available is the normal fire policy. In fact, some companies like my company, we've created special fire policies for them that we call the shop owners policy. But of course, we make sure that you put in place, it's not just any or every shop that we insure. Remember, as I said, the insurer has the duty to protect the pool. So we don't want to pack too many substandard risk into the pool. It will affect the quality of the pool, and the pool may end up collapsing. So the product is fundamentally a fire policy to cover the shop against loss as a result of fire, as a result of flood, and the allied perils, burglary, earthquake, and those things. So such products do exist. When you talk to insurance companies, you will get that product. But of course, you must also be willing to put in place the recommended housekeeping and also abide by the premium and other things.
Okay, great. There is a question about reinsurance and insurance companies. So I'm reading it out for you. It's quite a lengthy one. Okay. So it goes like this. Insurance companies try to reduce their reinsurance costs by building up their balance sheets. That is building investment assets. The logic is that the bigger your balance sheets, the better your ability to cover risks. So the less reinsurance you need. If insurance companies try to reduce how much insurance they must take by building their balance sheets, why shouldn't I do the same? Build up my investment so I can take my risk and reduce my insurance bill.
Very, very interesting question. I mean, I agree with the logic of the person. If you bear with me, I did mention that, I mean, nothing stops you from carrying your risk. But if you have a deep pocket enough, you can carry all your risk alone. Assuming, as I don't want to mention any name, assuming you're as rich as some people we have in Ghana, that you have like 10 cars on your compound, that even if one gets destroyed, you don't, you even bleed an eye. Such people have the luxury to decide that they don't need insurance because the losses that they suffer are not significant to their balance sheet or their bottom line. So if you are solid enough to carry the risk on your own, I mean, nothing stops you from doing that. But if you ask me, I still think it's financially smarter to transfer that risk and pay just a little premium than to carry it on your own. Unless, of course, the losses are very insignificant to you. Assuming whatever loss you are talking about will not even affect, it's less than 1% of what you own, then you can decide to keep it and nobody suffers. So yes, I know there are people who keep their risk, but if they have the capacity to do that, that's fine. In fact, even there are companies that own what we call captive insurance companies. So let's say a group, if you have a very big group, for example, let's say sometimes you are careful not to use other people's name. So let's say a very big company, a multinational like APSA or Stanbic, you have very big accounts, very big balance sheets. Some of them do set up their own insurance companies to cater for their need because their premiums alone are big enough to form a pool. So yes, nothing stops you from carrying your own risk. But the advice is that do the assessment properly and don't carry a risk that will cripple you financially or bring you down to earth when the loss occurs.
Okay, thank you very much for the explanation there. Our next question says, what happens if you fail to make required premium payments?
Right, so we are in the era called the no premium, no cover. So basically, our regulator has stated that, I mean, if you haven't paid for your insurance, if you haven't paid the premium, then in actual fact, you don't have any cover. Remember, I said the premium is the consideration that you give to the insurance company in order to enjoy the promise they are giving you or the benefits they are promising you. So obviously, if you haven't paid the premium, then you are not entitled to whatever benefit is under the policy. I know for the life insurance companies, they normally do monthly payments. So maybe they do monthly deduction. Some of them do give grace period. Maybe 1 month you were not having funds, so the deduction couldn't go through. They do give some grace period, so you can ask about that. I think it varies from company to company. But strictly speaking, once you haven't paid your premium, you are not entitled to the benefit because the premium is the consideration for the benefits being promised you.
Okay, thank you very much, David. Before we continue, I'd like to say that if you want to speak directly to David, you can raise your hand and we may unmute you so that you ask your questions directly. That's for those who want to ask their questions directly. And also, do well to keep your questions coming in the chat session and also under the comment section on our YouTube live stream. Okay, so the next one is asking, what does future scholar insurance cover?
I think future scholar insurance. Honestly, this is my first time hearing that, but I think it's a product from one of the life companies. The name suggests that, but I can't speak fully to that because I haven't perused the policy documents or haven't heard their marketing campaign. I think it should be something towards education. The name implies that, but I can't be too specific because I haven't had a thorough look at that product myself. But the name suggests that it's got to do with saving or taking an insurance towards either your education or the education of a family member.
Okay, sure. There is another one saying that, okay, how do non-residents participate in insurance? I mean, non-Ghanaian residents, sorry.
Non-Ghanaian residents, okay. So non-Ghanaian residents, you can still, I mean, if you have, I know most non-Ghanaian residents do have properties they've invested in over here. Nothing stops you from still taking an insurance policy to cover that. And also the life products that we mentioned, you can still take them. I mean, the most important thing is that you make sure there's an arrangement in place to pay the premium so that you don't default on the premium. And once the loss happens, the insurance company should come in to compensate you. So not being resident in Ghana doesn't necessarily stop you from taking an insurance product. But of course, maybe some products may have restrictions. So you need to do the assessment and decide which exact product you want to take. Talk to your insurer. I'm sure they will arrange something for you. I mean, we are in a digital age. Most of the insurers have hotlines, they have WhatsApp lines, they have email addresses that you can send messages and they will guide you through it.
Okay, Thank you very much. But with regards to premium contribution, there is a follow-up question saying that if I fail to pay my premiums, can I reactivate my insurance plan?
I think I addressed that by saying that some companies have grace period. So that's why the reading of the policy document is again very important. So you need to know what are the terms on premium defaults. If maybe for 1 month, maybe for genuine reasons, you are not able to pay the premium, maybe money didn't come in at that time. Some do give grace period, but so these are some of the questions you should ask when taking the product. Or if you have not even asked, refer to your policy document and make sure you are clear on what term is there, and do your best not to violate the term. If there are genuine reasons why you can pay the premium for a month, talk to your insurer. I'm sure they are reasonable human beings. Once they can see that there are genuine reasons, they can make some provision or allowance for you. But once you are just defaulting, you are not paying, most of them, the policy will terminate automatically, and you don't want to have that on your own.
Okay, thank you very much, David. There's another question here saying that are public spaces like government offices, shopping malls, stadia, and airports insured? And can we make any claim in the event of any incidents while patronizing their services? Can we make any claims?
A very good question. I think the question is in two parts. So the government, then also public places. For the public places, in fact, there's a law that requires that every public place must take an insurance policy against the risk of people getting injured on your premises or the building collapsing. I think that law was inspired or instigated by some things that we saw in the past where some buildings collapsed on people and there was no compensation for them. People had to call on the government, and we all know that as for the government, the problems are already made. They have so many things they need to cater for. So adding that burden to their headaches is not something government is really enthused about. So there's a law that actually requires that every public place needs such insurance. Some are not complying, but I would say that largely the compliance level is increasing because the National Insurance Commission is enforcing it together with the police and the fire service people. Although I admit that more could be done on that front, but enforcement is happening. So there's actually a law. So if whoever is asking the question appears to be a very risk-conscious person, so if you are so risk-conscious, you can always feel free to ask whoever you are dealing with if they have the necessary insurance in place to cover you should anything happen. In fact, even if you are working in a place, it's a public shopping place, a public place, it's good to ask the managers of the facility if they have the right insurance in place so that should such an event occur, you will not be found wanting. The second part has got to do with government institutions. I'll say that yes, almost all of them are also insured. So the airports is insured. So many government installations are insured. Some of them have some exemption because obviously government can cater for some of those losses, but most of them are insured. I can say that on authority. Most of the government places, the airports and other places are insured. So should anything happen there, rest assured compensations will be paid for those who suffer losses from that event. Thank you.
Thank you very much, David. I appreciate the discussion. There's another question about, okay, so it says, what is your opinion on insurance from the telcos?
I'm not sure what the questioner has in mind, but generally, insurance from telcos, in fact, the telcos are not really the ones offering the insurance. Let me say, behind every insurance from a telco in quotes, there is an insurance company sitting behind it. So the telcos are just basically providing their platform. As we know, because we are in the technological age, digitization of everything, telcos have become facilitators of almost every kind of business. So the telcos provide their platform, obviously, because they can do deductions on behalf of the insurance company. They can collect premium on behalf of the insurance company. So there are arrangements between the telcos and various insurance companies to sell one product or the other. So all I'll say is that when you are taking such products, one, know that the product you are buying, you are not buying it from the telco. You are not buying it from MTN or Vodafone. They are just channels. So you should be concerned about who is the insurance company or who is the underwriter sitting behind the telco. You should be concerned about the credibility and the strength of that person, because ultimately they are responsible for paying your losses. So that's what I would say about insurance through telcos. It's not really the telcos that are offering the product. There are insurance companies sitting behind it. But the telcos, they obviously they facilitate the process and make things easier for all parties.
Okay, thank you very much, David. This one is from Kwashi. He's asking, is cash value life insurance available in Ghana?
Honestly, I haven't heard of that on the market. Personally, I am in the non-life space. Of course, obviously, they are all insurances. So some of the life things I may not really have the answer. I haven't heard of that. Of course, I hear of a number of life products. I've interrogated a number of them, but this particular one that is referring to, I haven't heard of that on the market. But I would say talk to the life insurers. I'm sure they can give you a more appropriate answer. And if they don't even have that and there's an alternative, I'm sure they will gladly recommend that to you.
Okay. All right. Thank you very much. I think we are exhausting our questions. We have, I think, the final two. So let me read this one from Ajua. Ajua wants to know, can you make a claim on someone who died of COVID?
Excellent question. COVID was a disruptor and was a surprise to all of us. In actual fact, when COVID happened, it shook all industries, it shook all nations, and that has become an excuse for some people in perpetuity. But COVID also surprised the insurance industry. So when it happened, in fact, there were cases, some insurers were taken to court as to whether the policy they provided actually covered COVID or not. Because pre-COVID, obviously nobody knew about COVID. So COVID was not expressly stated in all insurance policy documents. So the insurers tried to imply on some of the policies that it was covered, whilst the insurers also tried to say that it was not covered. So let me say that when COVID happened, it created a lot of uncertainty, but thankfully that has been resolved now. COVID has been with us for about 2 years now. So now all insurance companies, if COVID is covered, it will be expressly stated in the policy wording. So if you are wondering whether your policy covers COVID or not, check your policy documents. If it is not mentioned in there, ask your people ab initio. They should be clear. Does this policy cover COVID or it doesn't cover COVID? They should be able to tell you straight away. But if it is for an existing policy, unfortunately, I can't give a general answer. It's a case by case basis. I know some people managed to get compensation for COVID under their existing policies before COVID came. Others were also denied compensation. So it will be a case by case basis, depending on what the policy document stated.
Okay. Thank you very much, David. Okay, so someone needs further explanation on. Okay, let me ask it directly. Can you insure a house you are renting?
A very interesting question. To an extent, yes, because you are legal. If you are legal, it depends on your contract with the owner. If you are legally responsible to compensate or reimburse the owner for any loss or damage that happens to the building, then you have what we call insurable interest, so you can insure it. But the best and the ideal thing is that the owner of the building is the one supposed to insure it. So it is good we are having this education. If you are in a rented place, it will be good to ask your landlord if the building is insured. If it is not insured, you can advise them to insure it. That is, if they are amenable to that. If not, you can discuss the possibility of insuring it in your joint names, so that should anything happen, you'll be covered. Sometimes maybe it is not stated in your contract, but maybe the landlord may think that it is implied that if you are the one there and a loss happens caused by you, maybe some gas explosion, and you burn down his building, you obviously expect you to cough up some money to pay for the loss you've caused. So yes, you have insurable interest to a large extent. So it is good you discuss first with the landlord, and if he's ready to reason with you, he does it, or you do it together. Or worst case scenario, if it's unwilling, you can still talk to your insurers. And if it's very clearly established that you have that insurable interest, it can be done for you.
Okay, thank you very much, David. I think we have exhausted all our questions for today. Maybe those who have questions can later contact you and then get the appropriate responses. But then let's take a final one. This one is asking, do beneficiaries have to pay tax on their insurance policies?
No. I mean, your whatever is paid you, or whatever sum is agreed with the insurer is there are no tax implications. I think, as we see, the insurance companies already pay tax to government, and I'm sure you as an individual, you already pay tax on your income. So yeah, there are no, it's not, tax will not be deducted. Yeah.
Okay, all right, thank you very much. Okay, I think we have our first hand here from Benjamin. Benjamin, if you can hear me, I'm asking you to unmute yourself. Hi, Benjamin. Okay, unfortunately, we are unable to reach Benjamin. Benjamin, can you hear me? If you can, kindly unmute yourself and ask your question. Okay. Okay, so unfortunately, we are unable to reach him. But before we bring this session to a close, I have a few announcements to make. First one is this webinar is proudly brought to you by investingh, and we are your leading provider of financial news and education in Ghana. You can access this webinar and all of our previous webinars on our YouTube channel, investingh. You can also get access to our resources directly from us via mail, or you can contact us on WhatsApp. I've made the WhatsApp group link available in the chat session here, so you can just click on the link or save it and share it with your friends, so you join us and get access to all our resources. The group admins are there to respond to your questions or inquiries, whatever they may be. You can, and whilst you join our WhatsApp groups, please, you only need to join one. You only need to join one. You don't have to join more than one. So if you are in multiple investingh WhatsApp groups, please just stick to one so that other people can join as well. We are very grateful and thankful for having you this evening. David, thank you for also coming.
Thank you too for hosting me. And thanks to our audience.
So if you want to be a part of our mailing list, please just join the WhatsApp group and then text any of the admins for a link to a form. You fill the form and then we'll add you to the mailing list. We are still working on getting our website back, and just stay tuned for more interesting things from Invest in GH. David, before we leave, just want to say thank you for coming. We appreciate your time. Do you have any final words for us?
My final words would be to once again thank the organizers and the participants for taking time off to come and listen. And I hope that we'll not only be hearers of the word, deceiving ourselves, as the good book says, but we'll put into practice all that we've heard from here. Thank you.
Okay, thank you, David. David's contacts will be made available via mail and also in the WhatsApp groups after the meeting. The presentation that he shared with us, he would also make available to us so that we can read it and also share it with our friends and family, so they all get educated about insurance. If you have any further questions for David, you can always contact him on WhatsApp. Yeah, so thank you very much. We appreciate you, and we'll see you next time. It's bye for now.